Siddharth Vasudevan Moorthy with us. He's Managing Director at Vascon Engineers, joining in this morning. Mr. Moorthy, thank you so much for your time and coming in today. Let's just start with getting the overall order book, and if you can add any details or color on this redevelopment project in Mahalakshmi. Of course, your biggest bulk continues to be EPC, but is there going to be more focus on real estate going further?
Yes, absolutely. First of all, thank you for having me. The 161 crore order that we won is actually a contracting project, which is an end-to-end project that we're doing for MSEB housing. And the timeline on that is 3 years. So we intend to finish it within 36 months. Real estate for us has been a very key part of our business. We've been predominantly in Pune, but we have 2 redevelopment projects in Mumbai as well as 1 greenfield project coming up in Mumbai as well. So the focus is to do, projects between Pune and Mumbai. And we also have a small presence.
Sorry, sir. What is the size of the project in Mumbai and what is the timeline on that?
So the first project is already underway. We've already come out of ground, and that has a GDV of around 300 crores. The second one is similar to that. It will have around a GDV of around 350 to 375 crores. And the third project, which is in Powai, is around 1,000 crores.
Yeah, you say 1,000 crore redevelopment project in Powai?
No, that is a greenfield project, but the other 2 are redevelopment.
Oh, okay. So, okay. Yeah. Siddharth, good morning, Neeraj here. What's the sense of what could be the total GDV or the cash flows of these projects, let's say over a 3-4 year period? So all these combined, whether you're doing in Mumbai or wherever else.
Yeah, so we have quite a few projects that are lined up in the pipeline. We have a 1.3 million square foot project in Baner that is in the approval stage as well. We have another 200,000 square foot residential project in Kharadi lined up as well. So all of these put together, just the projects that we have in hand today is around 2,500 crores. Our model for Mumbai redevelopment is a quick in, quick out project. So we're looking at projects which are less than 20,000 square meters, wherein environmental clearances are not applicable. So we can move in fast, focus on our core strengths and exit quickly.
Okay. Okay, there's this MOU that you signed with Adani Infra. Tell us a bit about this.
Yeah, so this is a MOU that we signed in where we come in as a strategic partner and we will assist them in completing their projects in Mumbai. There are 3 of them. I think we've already declared that a couple of weeks ago with the stock exchange as well. And we should be looking to execute these within the 5-year time frame.
I just want to understand the order book pipeline, Siddharth. What is the size right now? What's the total order book? What's the execution period?
So our order book today, excluding the Adani MOU, is around 2,900 crores. And these are predominantly made up of hospitals, very strategically planned so because these are public sensitive projects and they're time-bound projects. So around 6 to 7 projects out of these are hospitals. And other than this, since we are in the building sector, we have everything from resi to commercial, all of these. We've been focusing in the private sector only on grade A players. And therefore, today our clientele stands like the Vedanta Group and Capgemini. That's the kind of people we're working for, where we know that our cash flows and monies are assured, and therefore we'll be able to finish these projects on time.
In Q1, there was a loss of 3 projects due to competition. Can you give us a sense of, how you have dealt with this strategy? Is there now a move to maybe compromise on margins to deal with competition? What is the kind of order inflow impact that you see? Does this continue?
So the one very good thing is that there are a lot of projects out there, and therefore there is no need to compromise on margins. And we are not playing a game where we compromise on margins for the for the top lines. For us, bottom lines are as important as the top line, and therefore, it's okay if we lose a couple of projects. We understand that we can't bag 100% of all the projects that we bid for, but we are happy doing projects where we are satisfied with the bottom lines as well.
So what would be the real estate revenue recognition for you this year? We spoke about it right in the beginning about the focus on real estate. What would the revenue recognition be?
Yeah, so for us, the challenge in this is that because we are following the completion method, so we can only recognize the revenue at the end of the project, even though predominantly most of our sales happen at the beginning of the project. So this year we'll be recognizing around 100 to 125 crores in real estate. But against that, we should be having sales of almost double that.
Okay. Okay. Siddharth, any soft guidance for FY26 or FY27 as the case may be?
I mean, so like you can see our trend, I mean, we've already established this over a period of the last few years. We've been growing at a steady 25 to 30% in EPC organically. And I think that is what we will intend to continue to see.
Siddharth, I'm sorry, but you are no longer just an EPC player, right? So I'm saying console numbers. We have 30 seconds, Siddharth. Any soft guidance?
Yeah, so I was talking about both. So that is where we will see EPC. And in real estate, like I mentioned, we'll be doing around 100, 125 this year. And then that should hopefully kind of double in the next year.
Double in the next year. Okay. Well, wish you all the best for that and more. Thanks so much for taking the time out and being with us.